Well, it looks like it's going to be time for the dominoes to start falling, all related to the financial markets. And now that the Federal Reserve has increased the interest rate, as we suspected, I think it'll only be a short amount of time before this trickle-down effect starts taking place. The other issue is that all these emerging market economies are already tanking hard. And I don't think this interest rate hike from the Fed is going to help anything as far as they're concerned, for sure. So our neighbor, Mexico, according to silver doctors, bracing for massive default that could set off a global debt bomb. Perversely ironic twist, they say. Struggling governments are on the cusp of default across the developing world and about to set off a series of debt crises that will result in market chaos. Along with the interest rate hike the Federal Reserve just did, I'm sure that'll play a nice little role in that. The debt avalanches, once it accumulates enough mass and momentum is not sufficient to stop its collapse, it overwhelms its host and will come crashing down on the rest of the system too. Across the planet, there are hundreds of governments, local, state, national, as well as business and households who are reaching a breaking point. Already drowning in debt, many are about to default on loan repayments and thus set off a series of debt crises that will be met with market chaos and a tightening of easy credit for those who are most vulnerable to implosion. With Puerto Rico also timed for a major default that will burden the United States, Mexico is about ready to crash and bracing for impact. Its biggest construction firm, which has been dependent upon government contracts that are now drying up, is facing default on a $31 million interest bill. And so it begins, he says, via Wolf Street. In August, the bonds of Mexico's biggest construction company, ICA, had the dubious honor of being the worst performing corporate bonds across all emerging markets. At a time when emerging economies are slowing down and the total debt exposure of emergency market corporations has never been higher, this was no mean feat. Yesterday, the company's shares plummeted 22% on news that it would use a 30-day grace period to make a $31 million interest payment that was due this week. Today, its shares, which have lost more than 75% of their value since January, by the way, fell a further 8% to 3.76 pesos, their lowest point in 21 years. To make matters worse, the builder recently hired corporate restructuring specialist Rothschild & Co. I wonder, is that the Rothschild, one of their entities, or just some company named Rothschild & Co.? I don't know. But it is, they've hired them as a financial advisor, fueling speculation that it too will soon seek debt relief. If ICA does fail to pay, it would be Mexico's biggest bond default since the tumultuous days of the tequila crisis 20 years ago. The revenue reported by the company, which depends on the government for a majority of its contracts, has sharply declined this year amidst infrastructure spending cutbacks, while the weaker peso has exacerbated the company's leverage ratios. As Wolf Street previously reported, many Mexican corporations are acutely vulnerable to a strengthening dollar and rising U.S. interest rates. Oh, so there's that piece I was telling you about earlier. Federal Reserve just raised the rates. The sudden rise in central bank engendered liquidity after the outbreak of the global financial crisis enabled Mexico's biggest companies to borrow from the international markets in much larger amounts and for much longer periods than at any other time in history. And the slide of the peso against the dollar has significantly increased the amount of leverage at some companies. As the article suggests, a sluggish Mexican economy has made this company all too vulnerable to market failure. The dead weight of its collapse is liable to do some damage across much of the global economic landscape. The real danger is that enough incidents could set off a domino of debt bomb explosions that risk taking the whole thing with it in a brilliant fiery scene of destruction. Goldman Sachs, so often at heart of these financial matters, recently proclaimed that we are in the third wave of the financial crisis that reaches back to before 2008 and includes other major shocks to the global economy. According to Goldman, this wave is characterized by rock-bottom commodities prices. This triple whammy has its roots in the response to the first two waves of crises, the banking collapse and the European sovereign debt crisis, and it's all part of the so-called debt supercycle of the past few decades. Central banks all rushed to lower interest rates in response to the first two debt-fueled crises, encouraging investors to lend in emerging markets, such as China, for a decent return. Now that interest rates are looking as if they might go up, lenders are heading for the exits, and investors are pulling out of commodities, which are closely linked to the fate of the emerging economies. And Silver Doctors then goes on to say, and that is exactly what is going on today. Energy and commodity prices are bottoming out, and people are stressed over the shortfalls in revenue. Weak economic systems and promises under socialism and welfare systems are making the balance sheets impossible to rectify. As lenders are demanding repayment, third world nations are under extra pressure due to a strong dollar that costs more to repay. Seeing as how these debt bombs cannot be localized and contained, and that they are set to go off across the planet, this very possibility could be the beginning of some major impacts in global finance. Everything is vulnerable, particularly for those depending upon income and services from a failing system. For investors, all that is leveraged, collateralized, and sold into derivatives is in danger of catching flame too. The massive amount of true global debt, when unfulfilled obligations such as pensions that cannot be paid for are taken into account, is absolutely impossible to fix through conventional thinking. There will be many people left holding the bag until or unless the debts are wiped clean and the system sees a reset. That's just this little story out of Mexico. And what was I reading? Is it Brazil? Give me 1 second. Something about Brazil I thought I read today. Hang on. Yeah, here's actually it's Argentina is one of the ones I've watched. That Brazil, Venezuela, etc. Prepare for peso plunge. Argentina lifts currency controls. Late last month, Argentina voted to throw out the Peronists in what amounted to a sharp rebuke of Cristina Fernandez de Kirchner's handling of the economy, amongst other things. Mauricio Macri defeated Daniel Scioli, Kirchner's hand-picked successor, ushering in what the market hopes will be a new era for a country plagued by persistently high inflation and slumping growth. First on Macri's to-do list, and trust us, it's a very long list, is reforming the exchange rate regime. As we recounted 3 weeks ago, the president-elect wants to unify the official and parallel exchange rates, which is 9.60 and 15.50 of their currency to USD, respectively. And that will, of course, entail a substantial devaluation. Just how overvalued is the peso, you ask? Grossly. So Citigroup opined. Opined? You say opined, I say opined. Following Macri's election. As we went on to detail, selling dollars to support the peso really isn't an option anymore because, well, there are no more dollars. Although Argentina's official reserves sit at some 25 billion, net reserves, which factor in swaps with China among other factors, are likely somewhere between 400 million and 2 billion, which for all intents and purposes means the country is out of dollars, US dollars. So, you know, it says here, Argentina ends FX controls, finance minister says. Argentina lifts currency controls as value of peso seen falling. So you have to sit back and again, if you look at the big picture, how in the world can all these other countries, which, by the way, let's go there, USD to euro. So it's $1.08. $1 is 92 cents. So we're talking a euro is $1.08 to, you know, compared to the dollar, the US dollar. As I said the other day, when have you seen numbers like this in any kind of recent history? It's been during this crisis. And now, out of nowhere, the US dollar, and not because the Fed just raised rates, but the US dollar is all of a sudden just smoking, just touching 100 and stuff. I mean, absurd. It's been down in the lowest 70s and 80s. It's at 100. So all other world currencies against the dollar somehow are failing. So just, you know, my brain thinking here just a tiny bit. Why did our dollar go up? What did we do? Did something happen that we missed? Well, let's see. We had $9 trillion in debt when Obama took office. It's now nearing 20 trillion in the near future. So 18, basically 19 trillion. They've just upped the debt ceiling, right, to 19 point something, which, again, they didn't actually put a limit on it. They're just saying that by the time next year, that's where we could be. But it was high 18s. It's, all intents and purposes, it's $19 trillion right now. We added 600 and something, 39 billion in November. And as I said before, I understand there was 300 billion on hold until they kicked the can down the road, and they kicked it. But there's another 300 and something billion that was just added in November. Where did that come from? So how can you have a country that's printed more money than all other countries, and our dollar's the top strong dollars, the strongest dollar of all right now? Nothing can touch it. Emerging markets, they're failing miserably. All these other South American countries and Spanish-speaking countries, they're failing miserably. Argentina, we're going to, essentially going to have to devalue. Again and again. China's been devaluing. Again, recently they've started that process again. Strong dollar, strong dollar. This is all a plan by the club. It's only a strong dollar because the club wants it a strong dollar. You only have $35 a barrel oil because the club wants $35 barrel oil. And some bozo acquaintance, if you will, says today, I hear us out of the right ear, oh, good old Obama thing. We got $35 barrel gas thanks to Obama. Thanks to Obama? Did he negotiate this? I mean, I didn't hear that in the news. How did we have $35 because of the president? OPEC doesn't even set the price of gas, barrel of oil. Guess where it's set? American stock market, the commodities market, COMEX. That's where the price of oil is set every day. Lindsey Williams covered that a long time ago. It's one of the first things he said that when I ever found him. In the near future, you're going to see $150 at the gas per barrel, which can be $4 and $5 a gallon depending on where you live. First thing he ever said that I found him on. I kept it in the back of my mind. Let me just store this in case this guy's right. This old timer sitting in front of a podium right now. I don't know who the hell this guy is. Well, Lindsey Williams, who the hell is that? And then it happened. He got on the radio show. Oh, guess what? It's going down to $50 and below. Beginning of next year. You're out of your mind, Lindsey. All the experts are saying it's going to 200. I told you. My elite friend told me it's going to be. And by God, by late 2008, actually December, it was down to $50. 2008, just as he said. And he comes out and saying this while record gas prices are happening in July, $146 a barrel. He nailed it. And he's been saying the price of this stuff is set on Wall Street, the COMEX market. That's who sets the price. There's fake markets. They buy up all the paper contracts, and then they sell them to the right hand, and the right hand sells them back to the left hand, and they'll hold on to them for a while. If they don't want the price to rise, they just sell a bunch. If they want the price to rise, they hold on to it and don't sell. It's that simple. There's no position limits. They can buy as much as they want, and that's why the big banks control everything. And if they control that market, you don't think by chance they control the FX or Forex market, currency market, do you? No. So why do you think the American dollar is so strong right now? And I want to remind you, the last time the American dollar went up real nicely, right before the 2008-9 collapse. Magic 8 Ball. Are we looking at the same type of scenario in 2008 with the dollar rising fast and then bad news coming afterwards? Come on, get on the flat spot. Ask again later. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I'm asking again now. Give me an answer. Outlook is not so good. Magic 8 Ball says Outlook's not good. Then it's not good. Simple as that. I could have saved this whole video, however long this video is, and just shook the Magic 8 Ball right off the front, right off the bat, and told you. Saved you guys some time. Sorry about that. Please forgive me.